Welcome back to the channel Commerce Brainery. Now we are going to start with the series of Management Accounting. And the very first chapter under this is called Funds Flow Statement. Now, this chapter is very important. It is a paper of around 15 to 20 marks as well as 20 marks. So let's start with the chapter. Now, firstly, to understand the basic of this chapter, I'm just going to divide the whole name of this chapter into three parts. First is funds, second is flow, and third part is called statement. We will be reading out meanings of these three terms individually first. So, the meaning of funds first. The funds can be described in two ways, either in the narrow sense or in the broader sense. There are two ways of describing the meaning of funds. Now, it all depends where to apply both the meanings. Like we can't say to apply a single meaning in all the concerns. There are different situations where we will be dealing with different meanings of fund. Now, if we talk about the narrow meaning of fund, it means all the cash resources which a company has. So whatever cash or money resources a company has, all those can be described into funds. Now, keep this thing in mind. Here they are talking about only funds means only cash in the not narrow aspect. Now, if we talk about anything in broader aspect, the meaning of funds in broader aspect, that means both cash and non-cash resources of a company. So if a company has cash resources, other resources, those will also be termed as funds. And any form of working capital which the company has employed will also be called as funds flow state, funds under the chapter funds flow statement. Now, what do you mean by the working capital and all that we are going to study in the further videos? So here we have to consider all the financial resources of a company. That is the basic meaning of funds. Normally, the meaning in broader sense is applied in many of the concerns, and the narrow meaning is used in very few concerns, those which deal only in cash resources and no other resources in the form of kind. Resources in the form of kind means investment, assets like plant and machinery, furniture, fixture. So if you are not employing directly to your business, but you are putting down your assets into that business, that is also called your funds under the broader meaning. Now, here we have already discussed the meaning of funds. Now let's talk about the second part that is called flow. Now, flow is of two types. Flow basically means the movement of anything. How can you describe here? Flow here is with respect to the funds. So the flow will be discussed. The flow can be either in the form of inflow of funds or it can be in the form of outflow of funds. Inflow of funds or outflow of funds. It can be of two types. Now, inflow of fund means all those sources from where money is getting into your business. Outflow of fund means all those you are employing the funds out of your business to that particular application. So when the funds are moving into your business, that is called outflow of fund. Now the inflow of fund is also second source, and the outflow of fund is also called application of fund because you are employing your funds into a particular investment, into a particular application. That is why it is called application of funds. Now, the nature of a particular movement, like whether a particular thing is an inflow or an outflow, it always varies from one period to another period. Here, period means the financial cycle which is being followed by the company. Like in particular year, a certain movement can be inflow. However, in the next year, the same movement can be outflow. So it all depends upon the nature with which the funds are moving into your business or out of your business. Now, the second part is done. That is called your flow. Third part is called statement. Now, what is called statement? Statement means a detailed record with respect to the movement of funds. A detailed record with respect to movement of funds. So anything or any record or any specimen or any format which is going to describe from where are you getting funds into your business and where are you employing your funds out of the business, or what is the exact position of the financial what is the exact financial position of the business with respect to funds, whether the funds have increased from the previous year or they have decreased from the previous year, it will be called a fund flow statement. A detail providing all these questions will be a fund flow statement. So it will be possible only if you have two balance sheets in your hands. Because only by comparing the record of any particular thing in two balance sheets, you would be able to calculate whether there was an increase of a particular fund or a decrease of a particular fund. Now, this statement is not a single statement. Like we will be preparing three statements under this part, which will help us recognize the movement of funds. Now, what are those three statements here? The three statements which are prepared, first is statement of schedule of working capital changes. The second is funds from operation statement. And the third is statement of sources and application of funds. So these three are interlinked. You will be putting out the balance of first statement into the second statement, into the third statement, sorry, and the balance of second statement into the third statement. So these three are interlinked. You can't say that only by preparing this last statement you would be able to know the movement of funds. No, all the three statements should be prepared to reach to the final conclusion regarding how the funds are moving into the business or out of the business. Now, what we are going to do, we are going to start with discussing all the statements firstly individually. We will be solving questions, and then all the three statements will be combined in a single question, and then we will solve practical questions in a combined manner. Now, let's talk about the very first statement. Now, let's talk about the very first statement, that is called schedule of working capital changes. But before that, what is the meaning of working capital? Working capital is explained in two ways. The first is called gross working capital, and second is called your net working capital. Gross working capital refers to the summation of all the current assets which a company has, like cash in hand, cash at bank, your total debtors or your bills receivable, or any other asset which current asset which the company has. So summation of all those is called current assets. Of all those current assets is called gross working capital. Net working capital refers to the difference of current asset minus current liability. So firstly, you will get a summation of all current assets. Then you will get a summation of all current liabilities. You have to subtract those two figures. And if the figure is turning out to be positive, it is called your net working capital. So based on this meaning, what you have to do, your working capital schedule or your schedule of working capital changes will help you to know the net working capital of a business. Out of the statement, you will be able to know the difference of your current asset and your current liability. And in normal business, only the net working capital is concept is used. The concept of gross working capital is only in the form of books and is not applied anywhere in the businesses in a practical form. Now, how the schedule of working capital is prepared? For this, what you need, you need the balance sheet of two periods. As already discussed in the starting as well, you need to compare the two balance sheets. Out of the figures of those two balance sheets, you will be able to prepare the statement. So again, for this schedule also, you need two balance sheets, or you need the record of current asset and current liabilities of two periods or two balance sheets. Only then you would be able to know the difference between the working capital of 1 year and that of the second year. Now, how the statement is prepared? Firstly, you have to take particulars on one side, then balance sheet of 2 years. What the balance sheet of the previous year and of the current year. Current year is the year which you have recently completed. Previous year is the year prior to your current year. So you have to take these two figures. Then a next part will be your change in working capital. So either your working capital will get increased or it will get decreased. Means firstly you will calculate the working capital of previous year, then you will calculate the working capital of current year, and then you will differentiate these two terms. Then you will differentiate these two terms and you will come to know whether there is an increase or a decrease. And side by side, what you have to do, you have to check the individual component as well. So how we will be doing, let me explain. You have to put current assets, whatever the company has, like cash balance, bills receivable, sundry debtors, stock or inventory, or any form of prepaid expense. Just write down the amounts here. That's it. Those that are given in your balance sheet. Then check whether they have increased from the previous year or whether they have decreased from the previous year. We will be doing practical questions that will help you make the idea clear. Like if cash balance in the previous year was 50,000 and in the current year it is 40,000. So based on this, how you will be calculating the difference? You see that the cash balance has decreased over the previous year. The cash balance has decreased by 10,000 over the previous year. So this will make a decrease in working capital by 10,000. So in the same format, what you have to do, you have to put sundry creditors, bills payable, bank overdraft, outstanding expenses, provision for taxation, provision for dividends, reserve for bad debts, etc. You have to just post the figures here. That's it. And then you have to keep the total of both the things, again the total of current asset also, the point got next, and then you will be deciding whether the working capital has increased or decreased. Again, we will be doing practical question that will make the idea more clear. Afterwards, you will check whether the working capital has increased or decreased by getting out the changes here. It is not that much simple to the extent in which it is appearing. A little bit tricky point is there when you have to decide this increase or decrease. So it will be possible only when we do practical. So this is all about your working capital schedule. Like you have to take the current assets first, make a total of it. Then you have to take current liabilities first, make a total of the current liabilities, and then make a total of the same. Differentiate the two things, get the net change in working capital of the 2 years. And how we will be posting that change, where we will be posting that change, that we will discuss in our next video. So cover the topic till now, make this format or specimen in your notebooks. And from next video, we will be doing the second part of this chapter. Thank you.